All right, look at that. We got a full house.
Well, that's good. All right. Hi, everyone. My name is Mackenzie Sesto. I'm the president for the Private Equity and Venture Capital Association this year. And just for now, if you'd be able to turn on your camera and mute your mic for the best experience, that'd be good. But yeah, thanks for joining us today. I'm really excited to be doing an event with Sherjan. Great story, great experience. And I think it's going to be beneficial for everyone here. So thanks for coming.
Thanks, Mackenzie. Appreciate it. I love Peter and Jason. You guys got your suit on, man. I appreciate it. So I appreciate you guys joining. By the way, my name is Sherjan. I'm originally from Toronto. I'm back in Toronto these days. But a fun fact, this is not my usual teaching setup. So I was talking to Mackenzie about it. I'm actually teaching from a friend's basement today because they cut the internet. Rogers cut the internet at my place because they're doing construction. But hopefully this rustic background doesn't really affect our learning today. So what we're going to do today is I'm going to talk to you guys about a little bit about my background, what I've done. Not a lot of Canadians who have, gone over the wall and worked in these industries. I was one of the first ones to do it, and I've been trying to teach more Canadians to do it, and hopefully you guys can learn from that. Then we'll talk a little bit about what private equity day in the life looks like and what venture capital day in the life looks like. So that's hopefully something you guys can learn from. And then I have a bunch of questions that you guys have asked in the registration form. So I'm going to help answer that. And I think what I want this, today's session, I don't want you guys to be like, oh my God, he's, a VP or someone who's worked in this. I want you guys to be super authentic and natural and candid, unfiltered advice, right? That's kind of my style. So feel free to ask anything on your mind, from, money questions to hours questions to, questions regarding what are my chances to break in? I'm pretty open about all of that stuff. So don't hold anything back. All right. So we get thumbs up from everybody. All right, we got teams ready. All right, I appreciate it. Okay, so I'll give you guys a quick story about myself, so you guys have an idea. So I'm from Toronto originally. I studied aerospace engineering at the University of Toronto. I sucked at it. My GPA was 3.0, and you don't want me designing planes, right? So that's where I started. Wanted to be an investment banker because I was super passionate about investment banking, and I saw all the cool kids be investment bankers. And I was like, why can't I do the same? And so I, back then it was 2009, I was graduating through a recession, and nobody wanted to hire a, shitty aerospace engineer to do, financial analysis. So I went to UCLA and I, did a master's degree there in financial engineering, which was the only program I could get into, and with the goal to network as much as I can so I can hopefully break into investment banking. So that led me to breaking into Houlihan Lokey, which is a boutique investment bank in Los Angeles. I worked there for 5 months, but I was, I was grateful, but I wasn't satisfied. I wanted to work at a bigger shop, a better shop. And to me, that was Morgan Stanley's tech investment banking group in Menlo Park. So Morgan Stanley, obviously, you guys probably know, it's one of the best investment banks in the world. But the top shop that they have, the top group that they have is the tech investment banking group in Menlo Park in California, which covers all of their tech opportunities and tech deals. So I was lucky enough to lateral through a lot of hustle and networking and whatnot into that group, worked there for 2 years as an analyst. Then I left that and I joined Google in their late stage investment arm, or growth equity / private equity arm, called Google Capital. That converted into Capital G more recently, so it's called Capital G now. Worked there for 2 years. Majority of my focus was finding interesting opportunities in Asia, which basically means everything from Japan down to Singapore, China, India, and whatnot. So worked there for 2 years. And then I was called back into action with Morgan Stanley again. So they moved me to Hong Kong. So I left California, I moved to Hong Kong. I was an associate in investment banking there, then became a vice president in investment banking, covering the private equity and venture capital sector in Asia. So did that for 2 years. Then in 2017, I was like, enough corporate life. I want to be free and build something myself. So I built my first startup, which was in the recruiting space, related to Gen Z recruiting. So that was a software company. We ran that for 2.5 years or so. It failed miserably. And then I moved back to US and then now back to Toronto. So I'm a fake Torontonian a little bit because I left pre-Drake, and now the city is definitely a lot better and more fun. So I'm trying to assimilate myself back in. I'm a, Warriors fan, unfortunately. So, I know you guys are a big Raptors fan, but I'm happy for the city. But being in the Bay Area for a while, it just changes you a little bit. And, bandwagoner right here. So, just going to say it out there, and that's the truth. So anyways, that's my background. This course and online teaching stuff that I do, I've been doing this for 10 years now. This is the 9-year, 11-month that I've been doing this. Next month is my 10-year anniversary of doing this. I started this back in 2010 when I got my first job in investment banking in the US. And I came back to Toronto actually, and I did a session called Engineers on Wall Street, because I was an engineer, got into Wall Street, and I was like, hey, let me teach you guys how I did it. So that became something bigger and bigger and bigger over many, many years. It became something called Leaders. Leaders was an annual workshop. So I taught workshops at Harvard, Stanford, Berkeley, blah, 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 different places where students like yourself would come in, learn from me on a weekend workshop, and would learn how to break into these industries. So fast forward 10 years, I've taught 20,000 students, and this is my personal passion. I've done it for the last 10. I'll hopefully do it for the next 20, 30. And now it's all under my brand of my, crappy name, Sherjan. So that's kind of the high level background of what I've done. So what I want to do next is I want to talk to you guys a little bit about, because, Mackenzie's told me that you guys know everything or most things about investment banking. So there's a bunch of questions you guys have asked me in the registration thing, which we can cover in the end. What I want to talk about a little bit is day in the life of private equity and what that looks like. And then day in the life of venture capital, what that looks like. As you guys are part of the PEVC club, I think that'd be relevant to you guys. So let's start with private equity. So private equity is very much like investment banking. If you know what investment banking is, that's pretty much what private equity is also. But the big thing is in private equity, you are working on companies that you mostly ultimately own yourself. You're not helping clients do the analysis on them. You're doing it yourself. So usually the path to private equity, generally speaking, is after you've done a couple of years in investment banking. So once you do 2 years, 3 years, usually in investment banking, you'll get an opportunity to get into private equity. A lot harder to get into private equity than it is to get into investment banking. And investment banking, as you know, is also very, very hard to get into. So once you get into private equity, the firms that you're thinking of, the top firms are firms like Carlyle, KKR, Bain, those kind of companies, TPG, right? Those are the companies that you hear about. These are the elite, but there's also like another, 1,000 that are this middle market and small private equity firms out there. Ultimately, what happens in a private equity day in the life as an associate is basically just like what you do as an analyst. It's a tough job. It's not an easy job. Yes, you're an associate. You have a title that's better than an analyst when you were in investment banking, but your job hasn't changed much. You're still the bottom of the food chain in that company. So when you join a KKR, for example, let's say you join KKR Menlo Park in California, covers a lot of tech deals, covers a lot of healthcare deals. You basically, what's going to happen is, you'll meet a bunch of companies, and now you're not meeting them, but your partners are meeting them, and they may take you along on a meeting. So let's say your day starts a little bit earlier. Usually in investment banking, you'll start your day around 10 a.m., but in private equity, you'll start at 9 a.m., right? So it's a lot more, like there's not a lot of flex in terms of, what you can do in terms of personal life, because it's now the game is a lot more real than it was in investment banking. So in private equity, you'll start at 9 a.m., you'll go to your first meeting, you'll meet a company, you'll get a bunch of information on them. Usually it's called a SIM, like confidential information memorandum, which is just like think about it as like a 100-page or 200-page deck on a company. So you'll get this data from a company, and now the idea here is you're basically valuing an opportunity or figuring out an opportunity in terms of, should we buy this company as a private equity firm? So as the associate on the project, your job is a lot more in the model, in the Excel analysis. So that's the first part. So when you get all this data dump, financial models, accounting statements, financial statements, all that good stuff, you'll apply that and put it into a model that is built internally into the firm. So if you're a KKR, you have a KKR template, and you're going to be building that model. And these models are a little bit different because they are bottoms up, right? They don't just start from the revenue line. When you're working in investment banking, most models start from the revenue line, right? Like, okay, here's the revenue of the business, here are the costs, here's EBITDA, here's all the other stuff. But when you're working and you're trying to own a company, you're going to really think deeper about, what is driving that revenue. So the way I think about it is like any investment banking, project usually starts revenue onwards. Private equity projects and even venture capital projects start a lot earlier, right? So think about number of users, how much does each user pay? What are the costs associated with that user? What are the different revenue streams that are coming in to ultimately get you to the ultimate revenue number? So anyways, as an associate, you're spending majority of your day building that model and figuring out that analysis. Then after that, what's going to happen is you're going to build a presentation deck, because ultimately your partner, whoever is the partner leading the deal, he or she has to pitch it to the broader partner group, and it's something called the investment committee. Investment committee is basically all the senior people. They make a decision if this deal has to go through or not. So what's going to happen is you're going to create a presentation, which is going to be the case you're going to make for either we're in or we're out, right, of this deal. So to make that case, you have to do a bunch of research. Now, research can come from going and doing simple desktop research, meaning going and, through Google and through different resources online to finding details about the company. So let's just say, KKR wants to buy the largest lawn mowing company in the United States, right? So you'll go figure out what's happening in the lawn mowing industry. You'll go figure out what are the big players in the lawn mowing world. You're going to figure out what are the big clients from, commercial clients to residential clients, all of that stuff. So you're going to figure out that research, right? So that's stuff that you can find without calling a single person. Then you're going to get on the phone and start calling some of these businesses, right? Getting some information about them, figuring out the seasonality in the business, figuring out the different metrics in the business. Then you may even call customers, right, of these businesses that you just reached out to. Call some commercial folks. So really finding information that's relevant to your model, to your analysis, to figure out, hey, is this a real opportunity? What are the variables involved in this opportunity? So all that stuff is going to go into your presentation. Because you're going to create decks, you're going to create slides, you're going to create exhibits, which are going to showcase why this is a good opportunity for you. Then there's a bunch of stuff you're going to put in from competitive analysis, why this deal makes sense versus other deals, all of that stuff. So overall, the entire day is usually spent doing some of these calls, research, analysis, building presentations, building this Excel model, and putting that together. So usually speaking, by 6 p.m. or 7 p.m., you're done the first round of work that you have to do. But around that time, a lot of the senior people at the firm will leave, right? They'll go and do their thing, be back with their family. But as an associate, your job is not done. You're going to probably grab food, usually order in, Uber Eats, whatever it is. And then around 8:30, you'll be back in the office cranking away on finishing this work. That work, continues on. Generally speaking, as an associate in private equity, you're working with a principal. Principal basically, just the way in investment banking, you're an analyst and you work with an associate. In private equity, you're an associate, you work with a principal. So you're going to do that. You're going to continue working. You're going to work till midnight, hopefully send that deck out to the partner who's leading the deal. You'll get some comments back. If there are no comments, you can probably go home and come back in early, fresh. But if there are comments, then you'll, stay in the office until 2 in the morning, 3 in the morning, especially given the, what level of commitment there is at that time on that deal, right? If it's a hot deal and everybody's trying to get in, like Carlyle's trying to buy it, KKR's trying to buy it, and it's a bidding process, all that stuff, that's what you're doing. Similarly, you're working with external parties that are involved in the deal. Like you as an associate, you're, in a way, the deal captain. You're reaching out to the lawyers who are on the deal and figuring out things are good. You're reaching out to the accounting firms like PwC and Deloitte or whoever it is, trying to make sure the financial statements that have been provided by the company are what they seem they are, right? So all of that stuff is on the associates. The associate is basically a Swiss Army knife doing a bunch of stuff, right? And making sure the team, stays on track and produces that work. Now, if it is a slow period, you're not working on a deal, there's a lot of travel involved as a private equity associate. You're on planes, you're going to small towns all over the place. You're not just in New York, so the world, or Chicago, LA. You're going to all the flyover states, as they call it, and meeting these companies and being in meetings, being in management meetings, and getting as much data as possible. And you're the person who's supposed to be the jack of all, all information. Like anything that comes or is about that company, you need to be an expert at that. So that's basically what private equity, day in the life looks like. But ultimately what happens is when you do decide to, get into a deal, the KKR will put in 20% or 25% of the money required to buy that company, and the other 75% they'll get debt for it. And you'll obviously build LBO models and whatnot to, service that debt and hopefully ultimately own that company and flip it around and sell it. So that's day in the life of private equity. I think it's a great profession to be in, but ultimately I think if you want to do private equity, you should definitely do investment banking first. And if you hate investment banking, don't do private equity, because private equity is investment banking 2.0. All right. So that's just number one that I think what you guys should know. There's a lot of glamour around it because you feel like, oh, KKR, Carlyle, Bain, all that stuff sounds really interesting. But I'll tell you this much. I have, in the hundreds of people that I've met who have gone from investment banking to private equity, I can probably think of 1 or 2 who are genuinely happy, right? Yes, you'll make a little bit more money. Yes, you'll have a fancier business card, and maybe you have a BMW 5 Series and not a 3 Series. But ultimately, personal happiness is the most important part. So don't do it just because other people are going into it. Do it because you really love being in Excel and being, in those models and whatnot. All right. So that's private equity. Any questions related to private equity, drop them in the chat, and I'm happy to answer, related to that. So we'll take a 30-second break so people can type in any questions. And you can also send me questions on a one-on-one basis so that you don't have to disclose if you're worried about other people knowing what you're thinking. All right, let's move on while you guys type in that question. Oh, here we go. Do analysts work under associates at PE firms? So there are no analysts, generally speaking, at PE firms. Associates are the analysts. And you're at the bottom of the food chain, so you generally don't have someone who works underneath you. And that's one of the biggest misconceptions. A lot of people go from being an analyst in investment banking, hoping they're going to be an associate and they'll have an analyst underneath them. They're not. You are the analyst. So it's just a change of title, but not a change of role. And it's not a change of responsibility either, because you're still the person who's managing all the grunt work, lack of a better word. What are some of the benefits you realize exiting the PE industry? So I wasn't personally in private equity. I was in growth equity, right? So it's a little bit different. I think, benefits I would say for people who leave the private equity industry is like, you have a lot of credibility. You have a lot of analysis horsepower, because you can analyze a lot of businesses in the most detailed way. Like if you enjoy, for example, like I said, a lawn mowing company, that's a real example. Imagine like building a full model on lawn mowing companies, right? How many lawns are there? How much time does it take to mow a lawn? How much manpower do you need to mow one lawn per square foot? What are the materials you need to do it? What are the requirements for all the machinery you need? Like you really need to be passionate about all that stuff to be building a model around that, right? So now if you can do it for lawn mowing businesses, you can definitely do it for sexier businesses, let's just say like Uber or Airbnb or other companies. So having that tact that I love being in the numbers and having really deep, thoughtful thinking about why certain numbers are a certain way, that's what defines it. Now, once you come and leave private equity or even investment banking, you can use that in a lot of different industries. Like you can go and join Facebook and use that same analytical horsepower that you have to do cool things at Facebook or do cool things in government or other things. So I think that's a great skill to have. The other part, I think the benefit is, you just have this credibility from other people's perspective, because they're like, look, if someone can break into Carlyle or Bain or KKR and do that, I mean, they must be good at analysis. They must be good at doing this kind of stuff. Must be good at getting a bunch of data and condensing it and consolidating it into a very simple presentation. So that benefits you throughout your career. But having said that, even finishing investment banking should give you that, right? You don't have to get a KKR label to be able to prove to people that you're good at numbers and good at analysis and stuff like that. All right, did you ever find that working 80 to 90 hours per week deteriorate your mental health or relation to family? Oh yes, 100%. Great question, Isaac. I think, a lot of people forget this. Working in these industries it's extremely draining on your physical health and extremely draining on mental health, which doesn't usually get captured on, numbers or visually you can't see. Like if someone's, let's just say, has physical health that is, deteriorating, you can see it, right? They may gain weight or they may just look, not healthy, but mental health, you can never see the signs of it. So definitely, in investment banking and especially in private equity as well, a lot of people have struggles with it, and I would say majority struggle with it. I would even say 90% plus struggle with it, and it does affect you. And that's a question you guys have to answer yourself if that's worth it. My view is there's a balance you can do. So for me, I never let the struggles of the job get to me, because I don't take the job that seriously. For me, ultimately, I don't want to be unhappy. I don't want to be unhealthy, and I don't want to be, not happy in my, in my mental health capacity. So when things got tough for me, I would always put my hand up and say, hey, look, I think I have enough work. I really can't do that. If you want me to do it, I can, but I'll have to, get off some of the other projects, because I just don't have more room in my day. And for me, when I was at Morgan Stanley, for example, I would pull 4 a.m. nights on a regular basis, right? So get in the office at 9:30 and finish at 4 a.m. on a regular basis. So that gets to you. The first week, you're gung ho and you're excited, but then after a few weeks, you're kind of like, man, what am I doing, right? So ultimately, I think you need to be the judge of that. And when you feel like you're kind of getting close to that gray area, that red region and cautionary region, you need to put your hand up and say, hey, look, enough's enough. Now, at the same time, it all comes with building relationships with your team, your associate, your MD, your VP, whoever they are, so they understand where you're coming from. So for me, I always was, vocal about how much capacity I had and being super extra communicative about that. So that's number one. Number two, I never missed a workout. So even if my hours were tough, I would still get a 30-minute workout in. I think having a healthy physical workout done is important. It'll help you not just physically, obviously, but it'll also help you mentally. And also eating healthy, like not like, binging on things. Like I remember my first year in investment banking, I ended up eating a Haagen-Dazs tub of ice cream every day. And before you knew it, shirts wouldn't fit me at all. And then I realized, I was like, oh, this is not a good thing. So then I, stopped doing it. So I think like, it's very easy for the stress to build up and start going into those things. On the second piece you mentioned, which is related to relationships, most people lose relationships when they get into these industries, because for them, they're at this like, pedestal of like, oh, I'm at Morgan Stanley or Goldman Sachs or KKRs of the world. And I think that's wrong. I think if you lose personal relationships because of your job, then, why are we even working in these industries? So I think my recommendation to my mentees and people that I coach is you always have to take out time for the people that you love and people that are around you. The way I did it was, back then I had a girlfriend, so I would like, take her to dinner every Friday and Wednesday. No matter how busy I was, there was 2 hours allocated to at least put some time in to make sure you allocate for the people that matter. Similarly, for my friends and family, every Saturday morning, I would have 2 hours allocated where I would dial everybody who I knew who mattered to me. Doesn't matter if they were in Toronto or New York or Hong Kong. I would always call them and have a FaceTime or audio call, whatever it was, with them. Just doing a little bit of that, just to make sure the people that are around you are still connected with you, and you think about them and you're with them, is going to help you get through these times. Because mostly these jobs are going to be tough days. Right? Out of the 30 days, 28 days will be very, very tough. And you need that support network to make sure you keep going. So that's kind of the way I did it. And as you guys get into these industries, I would highly recommend don't lose it, balance it. That's the key thing. Let's answer one more, and then we will go into venture capital. What are some signs that might suggest someone will enjoy IBP before having experienced the industry? Oh, good question. Some signs. I think people who, like for example, in undergrad, I'm just thinking about it. When I was in undergrad as an aerospace engineer, there are some people who just loved attending every class, taking every note in class, doing the homework first before anybody else, all of that stuff. And, lack of a better word, you would call them nerds, right? Back when I was in college. And then, they would be super gung-ho about, studying for exams in advance, and, they would have more of the work ethic, which is great, but less of the social life, stuff. Those people generally do well, right? In the first rank of investment banking as an analyst, right? And even as an associate in private equity, because those jobs require you to sit behind computers mostly. But as you rise in these industries, you need to have people skills. These are ultimately people businesses, right? You need, as an associate in investment banking or a principal in private equity, or as a VP in both private equity and investment banking, or director and onwards, you need to be facing people. You need to be sitting across from them and convincing them to, partner with you in some deal or whatever it is. So if you're not good at that side of the business, you're not going to rise, right? Yes, you can have a great analyst career, but then at some point, that's it. That's the limit to what you're going to be doing. So my view is the best analysts are the ones who are good at 80% of the grunt work and 20% of that leadership, social, personality, all that good other stuff. And as you switch into associate and VPs and onwards, you need to start doing more and more of the people skills than being a master of building an LBO model with no mistakes. So I think that's kind of the way. So I'll give you an example. The best analyst and associate of private equity, analyst in investment banking and associate in private equity that I've ever seen was this guy named Michael Ding. He's still in private equity now. This guy can do Excel without looking at it. Like he can build the best model you've ever seen without ever looking at the screen, right? And he's the fastest typist I've ever seen in my life. And I remember first time meeting him, he was in Morgan Stanley. He was a second year analyst. I was a first year. And we were signed on a project together. And I was in this meeting and we were supposed to build a model. And I didn't know, anything about what was going on with that deal. So I looked at Ding, and Ding was just looked like this guy that I was like, oh man, how's this guy gonna even build this? I'll build this. So anyways, when I got to the meeting, Ding looked at me. Ding was like, hey man, I got this. Don't worry about it. And he was like such a calm, chill guy. And then a couple hours later, I didn't hear from him. So I went to his cubicle. I was like, hey man, do you need any help with the model? And he literally looked at me while he was cranking away on this beautiful model that I've ever seen. And just like, no, I got this, right? And it was just the most impressive thing I've ever seen. And that day I realized I could never be number one at Morgan Stanley, right? Because there's people like him that exist and they're just too good at it. Anything that Ding had to do twice, he built a macro or program to do it. So there's a certain caliber of people that are at some of these places that you'll never be able to compete with, and knowing your place is important. Similarly, when he got to private equity, one of the great stories I've heard of him is like, there was a meeting where a CEO of a firm who they were trying to buy, he went to TPG after, was trying to buy. The CEO was like, here's what our trucking business does, and here are the metrics, whatever. And in that meeting, Ding basically said something along the lines of like, look, there are 3 other competitors that you work with or are competing with. Here are their metrics, and here are their 2nd level metrics and 3rd level metrics. Meaning, like, yes, like mileage is one metric that is high level, but what if mileage with respect to fuel, with respect to distance, with respect to whatever else, I don't know, load capabilities? Like, he was thinking on the 3rd dimension of that data set, and he's like, you guys are way off on that. What's the reason for that? Even the CEO didn't know the answer to that question. And after the meeting, the CEO was just so impressed by him. Like, he wanted Ding to be on that deal no matter what. So the point is, there's some people that are just built differently in that. Now, on the other end of the spectrum, one of the MDs that I had at Morgan Stanley, he was so good that, even we had a deal where we didn't even have, he wasn't even an expert in, let's just say it was a tech deal, and he was focused on the consumer sector. Like, the clients would be like, hey, is that Michael guy gonna be on this deal as well? Even though Michael doesn't know anything about, tech. But having Michael, because people just loved Michael. People wanted Michael to be on projects, right? And Michael would be an MD, and he would, 10 minutes before the meeting would call me and be like, hey, give me 5 minutes on what this company does. And I'll be like, okay, this is what it does, this is what it does, this is where the business is. He'd be like, okay, get out of my office. And then he would show up to the meeting, be like, hey, Jenny, what's going on? And just, hang out with, and be social with them. So I think building the social skill in the future is important as you guys grow into these industries. All right, let's move on to venture capital. So venture capital, that's where I lean more. I think it's more fun, and I think it's less to do with numbers. It's more to do with people and ideas and seeing markets and seeing why certain things would work, and seeing the future is where venture capital is more built around. Private equity is seeing the past and seeing can be replicated in a guaranteed way, right? Okay, here's a business that's done this for the last 10 years. Can it do it for another 5? That's what private equity is. Venture capital is like, okay, here's a team that's cool. Here's an idea that they have, which may or may not work 10 years from now, right? Should we back that? So it's either looking in the future or looking in the past. So venture capital, day in a VC associate is like this. You'll start your day. It's usually a lot more chill. You show up to the office at 10 in the morning. You'll look through your emails. There's a bunch of inbound that has come up, meaning a bunch of founders from different companies have reached out to you to review their deal or take a look into what they're building, some MVP or some project. You'll go through that. Then around 11 a.m., you'll have a meeting with your partners discussing a portfolio company. Let's just say you invested in a company, like let's just say 5 years ago, you invested in TikTok, and TikTok was doing something decent, and you were like, hey, here are the metrics, here's what that company is doing. Then usually around noon or 1, you'll get into a bunch of meetings, a lot of people-facing business. So you'll meet a bunch of founders, 30-minute calls every day. So I remember when I was at Google, I would be on the call all the time, meeting founders across the world, from India to China to Canada, everywhere. These are just like, CEOs of different companies, CEOs that are your age, CEOs that could be 30, 40 years older than you, right? And you're just trying to understand what their business does, what their team is all about, what market are they tackling, and very little to do with numbers, right? Because in venture capital, there's not that many numbers to crunch. So then around like 5, 6 p.m., you'll have a meeting with the partner or the partner who's working with you in that sector. You'll basically summarize what you learned today or whatnot. And around 6, 7 p.m., you'll go home, you'll have dinner. Then at home, you'll do some more analysis or some more research on some of the companies that you're looking at. And that's usually what Monday to Thursday looks like, right? You're basically doing the same thing again and again, hoping to find companies that are interesting, that you're, aligned with the thesis of your fund. Then if there's a company that you really like, that's when things get even more interesting, because now what you're going to do is you got to make sure that company, can give you information, and you have to convince them to take money from you, because there's a lot of VC funds on the street and not everybody gets to put money in whenever they want, right? So you have to convince the CEO that you guys are the best fit for them. And obviously this is where the partner will join as well, and they'll try to convince them. You'll build a bunch of models, a little bit of analysis, whatever numbers you can get, but not really a lot, right? You have to make conviction on, hey, is this a product that is going to win? So you're using the product a lot, you're seeing the competitors, you're downloading a bunch of apps, you're seeing all the other stuff that exists. And then you basically are thinking from your gut a little bit, right? You're thinking about, hey, is this something that's going to exist 5 years from now? And is this something that's going to be $1 billion company? So then if that is the case, then you'll go to the investment committee, just like in private equity, you'll go to investment committee. And as an associate in VC, you're going to pitch, right? You're not as removed from the process as you are in private equity. In VC, you're actually one of the few people who's, on a deal and pitching. Like I remember when I was trying to pitch this company that was in Taipei, I flew to Taipei, stayed at, in Taipei for 2 weeks, met this company, stayed with them, saw what they did, then built a presentation, an investment committee memo, IC memo is what it's called. And basically pitched it to the partners at Google, say, hey, look, this is a good company. We should put $50 million in it. And here's why, right? So you build a case around it, similar to private equity in a way, but with less numbers, with more other stuff. And then if that gets approved, that's when you'll submit the money, get the legal team involved, all that good stuff, put in the money. And then after that, your days change a little bit because now this is part of your portfolio. Now it's part of your portfolio. You have to actively manage it, check in with them every 3 months, all that good stuff. So days, private equity, VC life is a lot more chill, a lot more social, less to do with sitting behind computers all day in terms of Excel, more to do with emails, phone calls, thinking, writing theses, really thinking about, the long game, the big picture. All right, let's move on to some questions on that. If P is 80-20 between grunt and people skills, as in say, would you say VC is, what would be VC split? I think VC split would be the opposite a little bit, right? I think VC is a lot of times, so remember, like when you think about venture capital and private equity, venture capital can also have, a few categories, right? If you're like an angel investor or a pre-seed investor, a seed investor, there's literally no data available for you to crunch. So it's basically making judgment on the team, the market, a basic product, and trying to think in the future about how that thing can, grow. When you're in like the middle stage VC, so you're doing Series A, Series B, those kind of, then you have some data. There's some sort of market traction. There's some sort of customer revenue numbers coming in, usage metrics, all that stuff. So you can analyze more. As you get into Series C, Series D, Series E, growth stage, which is also VC, but it's growth stage. Now you have a lot more numbers. You have revenue numbers. You have full financial statements. You have 3-statement models. You have growth models, all that stuff. So now slowly starts turning into private equity. And then you have private equity, right? And similarly with private equity, you also have hedge funds, right? Very number centric. So I think it changes. If PVC, like I said, is 80-20, 80 leading numbers, 20 leading people, VC on this side would be 20-80, right? Especially on the angel level, right? And then I think it's it gradually increases from there. What are some of the more exciting that you have what are some of the more exciting that you have been a part of in VCRP? I'm assuming what has been more exciting for me in VCRP? Isaac, you wanna reply? Sorry, my bad. I was ESL when I was in high school, so I mean deals. Okay. What is more exciting that you have been part of in VC? Oh, for me, it's always been VC deals, man. Like I think VC, but like everybody's different, right? There's cool PE deals as well. For me, VC deals were the most interesting because for me, I carved a space for myself at Google where I was like, hey, I want to be the international guy. So, doing deals in China, India, Taiwan, Singapore, that was always interesting to me because nobody else was looking at them from California, let's just say. And I was always be excited about finding companies that nobody else was looking at. Like one of the companies that I found was this company called Freshdesk. It was a small company out of India in Chennai or some part of India. And I cold emailed the CEO. The CEO came and visited us at Google in San Francisco. We loved them. We put money in very, very early, right? They were under back then they were probably $100 million company, if that, but nobody knew about them. And they had a competitor that was already a public company in the US. But now that company is over $5 billion, right? So that's made Google a lot of money from 100 million to 5 billion. That's a good return. So those are I love those kind of deals a lot more versus like, hey, here's a diaper factory in Brazil, which is usually a private equity, special, right? Okay, they sell this many diapers every year and this is the margins. And if we buy them, we can, adjust some things here, some things there, and hopefully have a higher EBITDA so we can pay our loan faster. To me, those things are less interesting. And I think that was the same case at Google as well. If we had a deal which was a lot more later stage, meaning it had a lot more numbers to deal with, you were just basically financially engineering ultimate opportunity, less exciting for me. I love things which are, still brand new. Like there's a company called Pop Shop Live out of LA. I don't know if you guys have heard of or seen it. It's a brand new company. It's trying to be the Twitch plus Shopify. Very, very young company, and you guys should probably download their app. It's a pretty cool company, I think, right? So it's live streaming shows similar to what you see in China, where, you know, celebrities sell products live, but it's coming out of LA, and they're doing some cool stuff. So things like that, I think, are super interesting to look at. What is the pathway to, let's see the time first. Okay, so I'm going to do this one question and then have a bunch of questions you guys have asked in the thing, and then we'll go to that as well, okay? What is the pathway to breaking to VC, and how does it compare difficulty to breaking to P? So pathway to VC historically was you got to do investment banking, generally speaking. 9 out of 10 associates in VC were from investment banking, and 1 out of 10 would be coming from consulting. But these days it's changed because what people have realized, and this is not, I'm not speaking like everybody, but like some good firms or top firms have realized, is that just knowing how to crunch numbers from investment banking and stuff is not going to really cut it in the VC world, because there's not that many numbers to crunch. But what they're betting on is that you understand analysis, you understand business models and all that stuff. But even better is if you come from industry. So if you come from operational roles in startups, in those companies, like my last startup, you learn so much while running a startup. You learn everything from marketing to getting customers to building product, building technology, learning the legal things, you know, learning market growth, geography, all of those issues, right? You're not going to learn that while working at a Morgan Stanley or a McKinsey. So when you come from industry, let's just say if you guys want to be a VC in the long run, my recommendation would be to go join industry, go join a tech company, go, you know, learn how to be a product manager there in some of these tech companies. And a lot of the top tech companies, from Shopify to Google and Facebook to the world, have great product management positions, especially as you're coming out of college. Go work there and rise up, learn a bunch of stuff about what actually happens in these companies and what matters and what doesn't. And then when you get to a VC firm, think about it this way: you'll be meeting a bunch of founders, and you would know exactly, you know, what the pains those founders are feeling. Like when I'm starting a startup, one of the hardest things is to hire people, right? And it's one of the biggest concerns for a startup is, how do I hire good talent? But if you've been in their shoes in a startup before, you would know. Similarly, how do you fire someone? Nobody teaches you how to fire someone, right? And it's a tough thing to do, especially when you're a founder and you have a lot of respect for the people that work there, but stuff's not going the right way. You have to let go of people, and how to do it with empathy is hard. So I think learning those things, and then learning things like, hey, how do I spend $1 on Google ads or Facebook ads and make it into $2? You know, nobody's going to teach you that. You got to learn it. So knowing those things is super, super important and super helpful. So if, let's just say, as you guys are in PE and VC world, you want to break into the VC world, go get operational experience. Is it harder to get into PE versus VC? I think both are hard. Both are difficult. With VC, it's more of a bubble than it is with PE. In PE, you can, it's less of a bubble and who knows who, right? But in VC work, everybody knows everybody, right? So if you want to break into VC, my best recommendation to you guys would be to go move to California, go work in California, go work in tech. You know, the Canadian VC market is too slow, too small, too scared, right? They're not, it's another Singapore, in my opinion, right? So I would avoid the Canadian VC market and even PE market if I could. If you have the opportunity, go to US. It's 100 times bigger, 100 times more aggressive, 100 times higher volume. And to do that, I would recommend you go to banking or opportunities in the US. All right, so let me see the questions you guys have put in. And then if you guys have more questions, I can go through them, but I'll go through these ones quickly so you guys can ask me more stuff. All right, where are the questions? All right, so first question, by the way, who was it? It was, who's the person who took my course? Was it Jeff? No. Was it Jason? No. Someone here.
I think that was me, Sherjan. Yeah.
Oh, Mark. Yeah. There you go. All right, so Mark, you were the first one who asked this question. So one of the things I teach in that course is, and as you go through interviews, is a lot of times you don't want to, give up all your information, and you want to only, release a little bit of information. But when you're answering a technical question, it's a little bit harder to do that. Yeah. So technical questions, I think, is something that you don't want to apply to all of that technique that I taught you. It's more related to behavioral, questions. For technical question, when someone asks you, there's definitely usually an answer that they're looking for. And usually these questions are 30-second answers. The answers aren't long for that. So my recommendation on that is if someone asks you, hey, what is the formula for enterprise value? You just tell them the formula for enterprise value is that, right? If someone says, hey, how do you, I guess one way you can utilize what I taught you was if someone says, hey, how would you value a company? Like a very broad, answer question. Then you can be like, well, Jenny, there are 3 ways we could value a company. We could use comparable companies analysis. We could use precedent transaction analysis, and we can also build a DCF. Happy to dig deeper into any of those if you would like, right? And then you just pause there. And then let her, ask you, okay, let's talk about precedent transaction. How would you do that? Well, this is what I would need. So that's, I think, how you would go about it. What is the best way to break into the world of finance while having a non-finance background? So there's a pretty broad question. Harder to, answer that. I think, if you're coming from a non-target background, I wouldn't be too worried about being non-target. I think, if I teach this in my courses, you got to network and you got to start as early as possible to put yourself in front of people that are going to be hiring you for that position. Because remember, ultimately, what I've noticed is that the job itself isn't hard, right? When you think about investment banking, let's start there, or finance, you're aligning logos on a PowerPoint slide, you're adding a few numbers in Excel, or you're writing a Word document. Anybody can do that, right? The job isn't that tough. What you need to do is convince someone that you could do the job and you're an awesome person that they should hire in their team. So that's all behavioral, right? So that's why like a lot of people that I, coach, a lot of students when they're at your age, they start, training for, LBO models, and they start training for financial analysis and accounting and case studies and whatnot. The problem is, yes, you can learn all those things, but if you don't even get an interview, and even if you don't, pass that interview and get the job, all that knowledge is irrelevant. So where you should be focusing on is building a brand for yourself, networking and spreading that brand, convincing people that, hey, I'm awesome, you should hire me, I'm fun to work with, I'm hardworking and all those things. That's what's going to ultimately matter. So which is why I don't teach technical stuff in my courses. I only teach the behavioral side of things. So that would be my high level advice on that. What tools should I develop if I would like to start my own venture in the future? So who asked me this question? You want to type in, when you say venture, you mean venture capital or your own business? Business. Okay, I see. I see the follow-up. Sorry. Thanks. So I think, I'm on my 3rd startup now. One has been successful, one has failed, and the 3rd one right now that I'm building is, too early. I think most important skill I would say is focus. It's very, very important. When you start a business, you start thinking about all these things and start building these castles and stuff. Oh my God, I'm going to have this, I'm going to have this, I'm going to like serve all these problems. None of that matters. I think, one of the things, if I could redo my last startup, I would be laser focused on who is a true customer. Like, what does it mean to have a true customer? Because you think about it this way, if you ask a bunch of your friends about your idea, everybody's gonna be like, oh, that idea is great. But then if you ask them, hey, would you pay me $1 for it? A lot of them will drop off. And then if you ask them, would you pay me $100 for it? Or, if I built this, many more would drop off. So really nailing down who is the true customer, who's going to be focused in buying your ultimate product, and what do they need, and how can you service that? That's what you should be focused on. I have a friend of mine, or a student of mine, who's in Singapore, and she's building a really cool company, but she's trying to do a lot of cool things. Like she's trying to like do this and this and this, but like there's too much stuff on her plate, and she's just not going to be able to do all of that. So I've told her today, I was like, hey, look, you just need to pick one problem. And if you think about focus, the way I kind of explain it to some of my students is that think of, all of this as a game of golf, right? Like when you think about a lot of, sports or teams, you think about basketball, football, whatever, team sports. But when you're an entrepreneur, think of yourself as a golf player, right? When you're in golf, you can't really affect anybody else's game. You can only affect your game. So what you need to be is just focus on the first hole you're on. Your whole goal is to get that ball into that, green, 300 yards away. And you can't even think that far. You got to just focus on this swing right now. So just focus on one little micro thing and do that. So the current startup that I'm building on the side, I'm purely focused on just getting one customer. That's it. One customer. Once I have that, then my next swing is going to be, how do I make that customer happy? That's it. Don't worry about 100 customers, million customers, all that stuff. So that'd be like one advice I'd say as you think about your own business. The other thing I would say is that as you want to start your own business, I'm a big believer in entrepreneurship. Go work in a startup before, right? Like I started my first business when I was an undergrad, your age, and I started a photography business, and I did something that I was passionate about it. I think you guys should all spend some time working for somebody in a startup and learning the pains in it. Like I have a developer who works with me. She's awesome. and she's learning from me, right? So, but the thing is, she doesn't have the risk of it. Like if this startup fails, she'll still be fine. But the thing is, like, she learns everything. I bring her into investor meetings. I bring her into, tech meetings. I, tell her all about the legal issues, hiring issues, fundraising, all that stuff. So just being a sponge and absorbing, and you can basically learn on other people's expenses, right? So if you want to start something yourself, that's awesome. I think you should definitely do it. But if you have the option right now, as you have some time, spend a weekend working for somebody. So my recommendation is this: go on Shopify or Instagram, whatever, and find local businesses in your neighborhood. Could be a cool, direct to consumer startup that's come up. Reach out to the founder, email them and be like, hey, I just want to work for free. I can come help you on the weekends, and I'll even fill in boxes, right? Let's say there's a makeup company out of Toronto that's selling makeup on Instagram. Let's just say, right? They have a marketing division, they have a servicing division, they have a whole, people putting stuff into boxes division, whatever. Go learn the game, right? And be like, hey, I just want to volunteer and learn. That's one of the best things you can do. And once you do that, you won't make the same mistakes that, that you would have if you didn't know. So that would be my quick advice on that. First year commerce student who's interested in finance and wants to intern at a bank in the summer, coming from a non-target school, what skills, So look, pretty broad question. My thing would be, look, I don't want to pitch my course all the time, but I think as you're early on, I think the best thing you can do is, take my course, especially if you're a first year, second year, or third year student, because you have time on your side. That course will answer a lot of your questions on how you can align yourself. In your opinion, what are the few traits that you believe are important to succeed in private equity and venture capital? I think private equity, extremely analytical, is super, super important. In venture capital, I think being a deep thinker about, overall trends, having a great understanding of, having the ability to understand people and founders and believing in them and taking risk, right? Massive risk. In VC, you should be willing to lose 99.9% of your money. That's VC, right? In private equity, you should never lose money. It's very different mindsets, right? So for me, I'm more VC type. I'll go all in a lot of things, right? Whereas in PE, you're kind of blocking and tackling. How do you become more comfortable and confident speaking to people you don't know while networking? Okay, this is a good question. So I teach this in my course as well. So I'll teach you guys a little bit of a technique. Look, I'm generally confident personally. I'm not worried about what people kind of think about me, and I'm who I am, and I don't care about other people's view of me. And obviously that's got me into trouble in the past, but it's all, but it gives you confidence. Over time, you become better about how do you, sharpen that and make it a bit more professional. My tip to you guys, if you feel like you're not as confident amongst new people or in new situations, the only way to fix it is to actually put yourself into uncomfortable situations. So one of the tips I tell people is let's just say you're just shy around people. And I'm just gonna, give an example. A lot of people are shy when they want to ask someone out, right, on a date. The worst thing that can happen is they'll say no, right? So what I, recommend to my students is whenever they have a chance, go to the local bar and find the hottest person you can find there and go and ask them out or ask their name, right? And 99.9% of the time, they're gonna reject you or slap you, right? Which is fine, but respectfully ask their name, say hi. And if you do that 9 times or 10 times, you'll slowly start getting okay with rejection. So the first step is just getting okay with rejection, right? And once you start doing that, you don't really start fearing people's opinions of you and what they think and stuff. So that's kind of just one tactic that I would recommend. As you network with people, it doesn't matter how senior they are or junior they are, you will have that, foundational skill in the back of your head. I remember when I moved to Morgan Stanley the second time, I was in the elevator and my boss introduced me to this guy named Jack. Let's just call him Jack for now. And he's like, oh, this is Jack. And he was like, Jack, Sherjan just rejoined the firm. He was at Morgan Stanley San Francisco. I was like, hey, Jack, how you doing? Jack's like, hey, welcome to the firm. I'm like, Jack, what group are you in? Right? It's just, and he was an older man, so I knew he was senior, but I didn't know how senior he was. And he looked at my boss for a second, saying does this guy know who I am? And I kind of looked at everybody. I was like, no, I don't know who you are in my mind. We're just making eye contact. And he's like, I'm the head of the group. I'm head of Morgan Stanley Asia. And I was like, oh, cool. Nice to meet you. Fire me. It's my first day. I'm not gonna, I'm not gonna be like, hey, welcome. Thank you, sir. I appreciate you. I'm not gonna do that, right? So have confidence of meeting other humans. It's just humans. It's all ultimately people. So let that fear out of you. Respect them and all that. I don't want you to be assholes to people, but I want you to know that ultimately we're just humans. It's not like someone who's a VP or an MD or CEO. Don't be worried. So, if you guys cold email folks, Start with the top. Start emailing CEO. You know, just because Jenny is a CEO of a firm, don't be scared that, oh my gosh, she's a CEO. How am I going to talk to her? Just email. Ultimately, she's going to say, worst case is no, or not going to reply to your email. No worries. Life goes on. How I got my job at Morgan Stanley was by emailing the most senior person I could find at Morgan Stanley who had gone to UCLA, right? This guy named John Esposito, who was head of an investment banking group in New York. Shot him a note, and I didn't worry about, like, I was just a low life analyst in the middle market bank back then, right? So I think you take that fear out by actually putting yourself into uncomfortable situations. All right, so what is the biggest mistake you have made in recruitment? Oh man, too many. Biggest one, so many. I don't have a biggest one. I have a lot of them, but oh, I know one. So this was a Goldman Sachs interview in San Francisco, and I had been rejected by Goldman Sachs a year ago for a summer internship, but then I had built good relationships with them, so I got a second chance for full-time. Goldman Sachs TMT, top group, really excited about it. I was so passionate. I had learned everything about it. I had networked with half the team. Like, I had my bases covered. But then when I did the interview, I crushed it, like literally crushed the interview, came out of the interview process so happy. I was like, I'm going to get this job for sure. I'm going to be a Goldman banker, 100%. There's no question about it. But then I got rejected, right? And I didn't know where that came from. But then I got feedback, and the feedback was I was too eager, right? When you're too eager for an opportunity, they can see through you. They can see that, hey, you have no backups, right? You basically want this job so bad because you don't believe in yourself and believe that you can be great in other ways. So one of the things I'd recommend to you guys is you guys go recruit in any opportunity. Don't make it a do or die situation. It's just jobs, right? And ultimately, if you don't get Goldman, you'll get Morgan. You don't get Morgan, you'll get Citi. You don't get Citi, you get RBC. You don't get RBC, you get TD. Doesn't matter, right? You don't get TD, you work for your uncle who is an accountant. That's fine. One step forward, right? My first job in the world of finance was a small shop called Corporate Finance Associates. No name shop, 2 men and a chair, unpaid, right? That's where I started. Then I slowly built from there, right? So don't be too eager for these things. Always believe that you'll be fine, but in the long run, right? And always be long-term greedy about those things. So that'd be my tip on that. All right, so we have another 6-7 minutes. We've done the day in the life. What are your thoughts on applying to multiple positions in the same company? Go for it, but don't do more than 2. Is it difficult to get an interview in finance internship if you have a strong GPA but don't have significant work experience? Look, I think having a good GPA is helpful, is important, but it's more important to be a better brand overall, meaning like just having a number that's 3.8 or 3.9, it's not that helpful. So I'll give you an example. Let's say I get 2 resumes in front of me. One resume is a 4.0 GPA. The other is a 3.6 GPA. 4.0 GPA basically has crushed it in school, meaning took all the courses and got an A+ in it. 3.6 GPA is part of the volleyball team, knows how to play piano level 8, started a small business on Shopify selling, paper cups, I don't care what, is an artist, has a YouTube channel. Oh my God, guess who I'm hiring? I'm hiring the 3.6 GPA. So it's, figure out how you can build a great brand around yourself, which is not GPA, right? So interesting people get the opportunities, non-interesting people don't. So if you have time and you guys are all young and in undergrad, take this time to build your brand, go in, join as many clubs as possible, start a club. If you don't find a club that's interesting, start a small business. It could be as small as a lemonade stand. I don't care. Start something yourself, right? Go travel, go do a semester abroad, right? Involve yourself with things that are not part of the beaten path. That's what's gonna, set you apart. And that's what makes you interesting, right? So those are I think the cool things you can do. Be creative, write articles on Medium, go write a book, right? Who's stopping you, right? When I was an undergrad, I started a photography company and used all of my OSAP to buy my camera and lenses. The lens I'm using right now for this class is actually from my OSAP from like 12 years ago, 13 years ago, right? So, and then when you do things like this, which are off the beaten path, when you get your interviews aren't about, oh, tell me about your GPA. They're all about, okay, how did you even start this photography business, right? Similarly, when I got my interview at Morgan Stanley, it was all about, okay, tell me about this coaching business you've started on the side. I'm an analyst, right? Similarly, when I got to Google, they were like, okay, how did you expand your workshop from Toronto to Harvard to Hong Kong to Singapore? Like, there's no path to that. It's just, I'm passionate about it. I'll do it. Doesn't matter how much money I get from it. That's just what I'm going to do. So find something that you just naturally are happy to do, double down on it, triple down on it, make it part of your story. And that's what's going to sell you, right? So if you look at my resume now, And if you take my course, you'll get my resume as well. Morgan Stanley, my dream job as an analyst in investment banking in tech in Menlo Park is only 2 lines. It only takes 2 lines on my entire resume now, right? So think about that. All right, last question. What are the recommendations for the first few weeks of internship in terms of adopting new software tools? So look, I think a lot of people worry about what's going to happen in the first week of your job and all that. As you know, people who are not in the industry, my recommendation to you guys is to not even worry about it. Don't worry about the first month of the job. The first thing is to get the job, right? So don't worry about how to crush the job. They'll train you how to do it, all that good stuff. Right now, you should be 100% focused on that one golf ball in front of you, which is like crushing, getting the job. And getting the job means building your brand, networking, crushing interviews, all that good stuff, right? So that's what I would recommend that you guys focus on. Don't worry about crushing the job. All right, last question here. All right, so that's pretty much it. Any questions on the chat? Who wants to put their hand up and ask me? Otherwise, don't be scared, guys.
I was wondering if I could ask a question, just look over the video.
Yeah, go for it.
Yeah. So first of all, thanks for speaking with us. I've definitely taken a lot away, especially about PE, because I didn't know that much about the day-to-day, so it was cool to learn about that. My question is, and if this is part of the course, let me know. But for example, when you're networking or having, a coffee interview or something with somebody at a company that you want to work at, what's something that anybody can do to make like a great long-lasting impression that's going to want to make the person hire them? Or
Yeah. So I think I would say 3 things. More than that, 4 things I would say. A, show up, 20 minutes before, right? So just show up before that thing was going to happen, because there's always excuses. People have, traffic, this, that, whatever. I would always show up 20 minutes before anything else and just, park myself somewhere nearby. So show up before time, and that's on being on time. When you get there, a great handshake is always awesome. Right now, I know we're in COVID days and I don't know if handshakes will stay or whatnot, but in the past days, handshake basically told you a lot about the other person, right? Number 3, eye contact and smile, right? People always forget this, but you got to smile, right? It's a people business. People hire people that they enjoy spending time with, and think about it this way, from your own personal life. Like, you guys have found friends who smile when you're around them, right? You don't go hang out with people who have frowns and just are like, not happy people. So smile is another good thing. And the other thing I would do is I would always insist that I'll buy the coffee and I'll pay for the coffee, right? And make sure you do that and take out the friction of it in advance. So for example, let's say you're there in advance and you're grabbing coffee at a Starbucks, somehow pay in advance. Like, I would even email the guy, be like, hey, I just got here early. What can I get you? I'm getting a hot chocolate myself. And then, they'll let you know, right? A lot of people are like, yeah, can you get me just a small black coffee, right? Something like that. So always do a little bit of things like that. And I think that's a great way to, set those high level impressions that this is a good person, and just be super appreciative of their time. Ask thoughtful questions, and thoughtful questions all about them, right? Don't ask questions about salaries, hours and this and that. Just be really passionate about, hey, Jenny, you've had an amazing career. Tell me more about this. That was awesome. And how are you thinking about, the next steps? You've been there 4 years now. Are you thinking of an MBA or something else? Just be super curious and be super respectful of their time, right? Like, when you're hitting about, 10 to 15 minutes, that's more than enough, right? So just be like, hey, look, Jenny, I want to be respectful of your time. I know you have to go back to work, but I really appreciate you taking this time, and I'll definitely keep you in the loop of when I'm in recruiting or whatnot. So that would be my, I guess, top tips for you.
Yeah, thanks for the great answer.
No worries, Jason. And stay away from like, oh, I had read about this deal you did. Like, a lot of people try to over impress on like the knowledge of the business. They know you're a young kid coming out of college. You probably don't know, and I know you read some deal memo or something or on Wall Street Journal. Stay away from it. Make it personal, right? People hire people. That's the important thing. Okay.
Thank you.
Other questions, guys?
Yeah, sure, John. I was wondering, I know this answer kind of varies from company to company, and I guess we can talk IB since I think that's sort of what most people are thinking of. But like, after your first round interview and after a super day, what's kind of the typical wait time before hearing back whether you were successful or not?
Yeah, so I think first round to second round, generally speaking, under a week, especially during peak recruiting season, right? It's pretty fast. The reason is, think about it this way, right? Like all firms are doing the same thing. All firms are, hunting for talent. So they need to move fast. So they'll do first round interviews. By the end of that first, round of interviews, literally that night, all the feedback on every candidate has been compiled, analyzed, and, you have selected the top 10 that need to be moved to second round. As soon as the second round, has been selected, the next day or the day after, those invites go out. So depending on what time, what season it is, if it's, peak recruiting season, it's pretty quick, right? Now, just because you don't get, you don't hear from someone doesn't mean you're off the list. Sometimes what happens is you might be in, tier 2, which is like, okay, let's reach out to the top 10 first. Some of them might have been like, hey, no, I don't want to come interview with JP Morgan because I just accepted an offer from Morgan Stanley or whatever else. So then there's always a spot available, and then they'll, bring some people from tier 2 into tier 1, right? So things like that can sometimes take time. If it's been more than 2 weeks during peak recruiting season, then it's usually a negative signal, but that's okay. That's just part of life. In lateral processes, it can take a lot longer, especially in the world of VC and, and PE as well, when it's not peak recruiting season. One of the things we used to say at Google is like venture capital firms and hedge funds, for example, as well, are always hiring, but they never hire, right? They're always looking for talent. They're always, figuring out who'd be great to hire, but there's not a structured recruiting process. So in those situations, you may interview at a firm, not hear back, and that's totally fine. But, sometimes you do hear back. But that's kind of the way that usually it goes. I've had too many processes where I've never heard back from. So so if you've not heard back something, don't worry. I spent too many countless nights waiting for Goldman Sachs to call me, and they never did. And that's okay. And the funny part, guys, is like, as time goes by, you'll realize it's a very small world. When I was at Google after Morgan Stanley, we had a deal we're working on. Goldman came by the office and they were pitching us a company to buy. We're looking at it and it was pretty interesting. And then I saw the guy who was sitting across from me, this MD. I was looking, I was like, man, this guy's so familiar. I've seen him before. I was like, oh shit, this is the guy that I interviewed with at Goldman. So I told him, I was like, John, I think you interviewed me at Goldman, and I think you are the one who emailed and said, thanks for applying, but no thanks. And he's like, no, it wasn't me. I'm like, well, hold up. So I went on my Gmail and I found the email. I'm like, this is you. She's like, yeah, that is me. I'm like, so it was you. So, things like that can happen. It's a small world, but there's no hard feelings. This is just business. So, always be focused on building bonds. If someone rejects you, doesn't hire you, no worries, move on. Still be friendly, still high five when you see them, still be open-minded. Because remember, 2 years from now, you're going to be sitting across from them or working with them or working for them, or they be working for you. You never know. So just be open-minded about it. Other questions? You guys think Janice is going to come to Toronto? All right. But good, guys. Any other questions? Mackenzie, I'll send you some information that you can then share with them after. I have a course you guys should take. I think especially if you're in freshman, second year, or junior, super helpful to you. That's everything that I know about how to break into these industries, and you guys can learn from it. We'll give a little bit of discount that you guys can use. But I think that's going to be something that I truly believe in, and it's going to be helpful to you. If you need to get connected with me and stuff, you can add me on LinkedIn, but I usually don't, check LinkedIn messages. Twitter is probably the best way. I'm Sherjan on Twitter. And yeah, I put out random shit on Twitter, YouTube and stuff all the time. This is what I do on a full-time basis right now while I'm working on my other startup. So, sign up to that. And there's a Mentor Mondays newsletter that I write. So if you go to sherjan.com, you'll find all the information. And then Mackenzie can also send you some stuff that I'll send to you. And then this recording we'll put up on YouTube if you want to watch it again and listen to my boring voice again. Cool, guys? All right. Well, look, as Canadians, I want to get more of you guys into the fancy world of US. So, do your best. Hopefully I can see you guys send me emails from @kkr.com soon. So good luck. And if there's anything I can do, just shoot me a note. All right.
Cool. Yeah. Thanks, Sherjan. It was great having you.
Yeah. Thank you so much.
Thank you.
No, thanks, guys. I appreciate you guys. Take care. Okay. Let's see who's the last one. I'm just going to wait. I'm kidding. All right, guys.
It's a competition now.
It's like Survivor.
You can be the last clap.
Yeah. Well, thanks, guys. I appreciate it. And thanks, Jason. Appreciate you wearing a suit and all, man. And Mark, I appreciate you guys. But also Omar, man, I appreciate the hood look. That's cool. Looking good, looking gangsta. But I appreciate you guys. All right, take care. Enjoy. I'll see you guys
Thank
soon.
you for your time.
Take care.
Thank
Bye-bye.
you.